Hi everyone, Michael here. Holy smokes, do I have some news for you. The Federal Reserve has just issued its latest statement and also released their latest minutes from their last monthly meeting. Now, according to the media, this was just a pretty boring statement, but I found some absolute gems in this meeting minutes, and I actually studied this and read this for hours and then cross-referenced this to other things, and I found some things in these minutes that will shock you. In this video, I'm going to go over exactly what the Federal Reserve said in their monthly statement, and they're now starting to talk about inflation a lot, and it was actually mentioned 64 times. They talk about the risk building in the housing market and some changes to their monetary policy. But something I have to share with you, and something that is absolutely crazy, and this goes along with the video I did the other day, how the Federal Reserve is discontinuing the way it currently records money supply data, and it's now going to change that. And some people think, oh, they're just changing it, it's not a big deal. Well, I think it is. I think they're hiding something. They're becoming less transparent with the public, and I think something big is going to happen soon. But guys, this was not mentioned in the media at all, and I couldn't find any YouTuber talking about it as well, but this is not a coincidence. Now, this is so important. I'm going to read this word for word directly from the Federal Reserve's website. You have to understand what they're doing. Action to adopt changes to the committee rules regarding availability of information. Exactly what I said yesterday. And people saying, oh, you're just fear-mongering, you're just doom and gloom. It's right in front of your face, people. The facts are right here. But they think the general population is too stupid to see it, or they're too busy following the Kim Kardashians to worry about how their money is being devalued into the ground. By unanimous vote, unanimous, they all want this, the committee approved a final rule that revises its rules regarding availability of information, which are the committee's Freedom of Information Act, FOIA rules. Again, they're going to want to keep you in the dark. Something's big's going to happen. I've been warning you, but people aren't listening. The revised FOIA rules, which include a range of minor, just little minor and technical updates, to try and say, look, this is a little minor technical update, nothing to see here, look over there, will become effective 30 days after the forthcoming publication of the final rule in the Federal Register. Holy macaroni. Guess what happened in 2008? They stopped recording the M3 money supply, trillions of dollars went missing, they were grilled by Congress, and nothing ended up happening. And this just happens time and time again. Every financial crisis, the Federal Reserve is getting more and more power, and they're starting to own more and more of the global assets. And guess what? Guess what happened just before this announcement? George Gammon is actually filing a lawsuit against the Federal Reserve because he thinks they broke the Federal Reserve 1913 Act when they started buying corporate bonds and corporate junk bonds. They were bailing out Apple, they were buying all the corporate debt in 2020 when the stock market started to crash. They bailed out the stock market. And you may think that's great, my 7 shares in Tesla are up, I'm going to be rich. Meanwhile, the cost of living is about to skyrocket with the amount of quantitative easing and money printing they're doing. And what George said is the first step in the lawsuit against the Federal Reserve is you have to ask for freedom of information. His lawyer is going to get all the information, everything the Federal Reserve has done, and then it can find out exactly what they've done wrong. But guess what? Now they're changing the rules. I guess the Federal Reserve and the banksters are above the law. Please everyone, I beg you, share this with your family, share this with your friends, let them know of the theft that is going on right now and the debasement of their money, the money you're working your butt off every day to earn, and then next year, your wage is going to buy you less and less, and you're going to have to work more and more just to get the same amount of goods. Okay, now let's get into the risk of high inflation and possibly hyperinflation down the road, because the Federal Reserve did mention this because there's so many people saying, we know that you're lying about the official CPI numbers, we know high inflation's coming, and the Federal Reserve had to comment on this. Have a listen to this. Incoming data on inflation were a little above what the staff had expected. And this is a huge thing for the Federal Reserve to admit, because normally in these announcements, they speak in tongues, they don't want to rattle the markets, they don't want to send fear in the markets. But even them, they're saying it is above their expectations. It also says, in addition, inflation was forecast to be temporary, and governments always say everything's temporary, don't they? Boosted this year by expected emergence of sub-production bottlenecks and supply constraints. And again, it's not their fault, it's all the supply issues, it's all that Suez Canal issues. Inflation's not our fault for printing all this money. They always got some other event to blame it on. Have a listen to this. The staff viewed the risk of upside inflationary pressures of having increased since the previous forecasts. So again, they're admitting it is going to be much higher than they expected. And a quick side note here, what you need to know is inflation is just a hidden tax, and it's really theft and debasement of your hard-earned money. Inflation's great for the government because they can't repay the debt, the $28 trillion debt, so they need to devalue the debt. And also as the cost of goods go up and people's pay brackets go up, they go into higher tax brackets, it's more revenues for the government. And it's great for asset prices, but it doesn't really help the average Joe. Think of this. Would you rather get a 2% pay decrease every year and the cost of goods fall 10% every year due to innovation and more productivity? But most people will see a pay decrease and they'll say, no, I don't want that. So what they do to fool you is saying, look, we want to get unemployment down. We want to help out the little guy. So we're going to pump inflation. And say, for example, you get a 2% pay rise and you're like, yeah, I got a 2% pay rise. I'm kicking goals. But meanwhile, inflation is 5% because I think it's minimum 5%, not 2% what they're recording. So you're actually getting a pay decrease and you're actually losing purchasing power every year due to the current policies that they have in place. Listen to this. Accordance with the committee's goals to achieve maximum employment and inflation at a rate of 2% over the long run, and with inflation running persistently below this long run goal, they would aim to achieve inflation moderately, not just a little bit, moderately above 2% for some time, so the inflation averages out to 2% over time, and longer term inflation expectations remain anchored at 2%. So what they're saying is, look, we're just going to temporarily lift inflation. It's going to average out. So even if it's 6% this year, well, it was about 1.5% for the last 10 years. So we'll just average that out at 2%. Are you okay with them devaluing your money by 6%? Are you okay with the cost of goods going up 6 to 10%? I don't think so. And they keep saying that their targets is full employment and price stability. But with price stability, it seems like they're changing that price stability to they want price increases. And like I said earlier, they keep using unemployment as an excuse to bail out the banks, bail out Wall Street, to pump asset prices to make the rich richer. The top 10 billionaires last year made $540 billion. Meanwhile, 150 million people in the middle class globally went into poverty. I guess their monetary policy is working great. Also, they said their balance sheet increased by $400 billion, and they're going to continue buying $80 billion worth of treasuries and $40 billion of mortgage-backed securities, and they already own a third of the mortgage-backed securities market. The housing market is running hot, but they're not turning off the money printer. They're continuing to buy mortgage-backed securities, and they're continuing to overcook the housing market when there's pleas for them to do something about the affordability issue. But I guess they want you to own nothing and be happy. And another change they're making is, normally what they do to get inflation under control before actually high inflation came in, they would actually go off forecasts. But now they're saying, we're not going to do anything about inflation until it actually gets out of control, and then we'll step in. Again, guys, they want inflation because they can't afford to repay the debt, and they're going to inflate it away at the cost of your hard-earned dollars. They said CPI was only 1.7% year on year from February, but have a listen to this. CPI increased 0.3% in January, and it's now starting to rise, and it went up 4% in February. So if you use 0.4% every month on an annualized basis, that means we could have inflation of 4.8%, and that's recorded inflation. The real inflation number will be much higher. That's nearly 2.5 times their 2% target. So even if you do get a job and you're getting a 2% pay rise, you're actually losing money. They also commented on rising bond yields and says this is a risk if bond yields do continue to rise, because interest rates will rise, mortgage rates would rise, and asset prices could fall. And markets that bet on when the Federal Reserve will raise interest rates are now starting to price a 25 basis points rise 9 months earlier than the Federal Reserve is saying. And again, the Federal Reserve, the RBA, they have to go out there and talk up the market, because the markets hang on every word they say. If they even say anything negative, the stock market would start selling off straight away, and then bond yields would start rising. And they also comment on how the RBA and the ECB is increasing their bonds purchasing programs, because they now have to compete against the dollar, and everyone's in a race to debase their currencies to import inflation. And something that's very unfortunate, and they commented on, they said there is some tightening in the small business lending and delinquencies arising for small businesses. And something huge for the housing market, because I know you all love hearing about the housing market, they said mortgage lending is tightening, and now the banks are only picking the best of borrowers. And the banks may be doing this because they may see a housing downturn just around the corner if these forbearances do go ahead, because they're trying to extend it again, but that hasn't been confirmed yet. But if they don't expend it, we could see more forbearances coming at the end of the year. And the banks are pricing in this, and they don't want any risking borrowers at the moment. Also, they commented that mortgage rates are rising, and this could have a weakening effect on the housing market. So everyone, like I've been warning you, inflation is much higher than reporting. They're now starting to admit it. The public is waking up to how high inflation is coming, and they're continuing to say they're not going to do anything about it. They're continuing to say they're going to have easy monetary policy when the economy and the housing market and the stock market is overheating. But this is a lose-lose situation. Either they just keep on printing money and risk going down high inflation, potentially hyperinflation, or they have to step in and lift interest rates. But if they lift interest rates, the stock market would come falling down and the housing market would come falling down. Because the housing market and the stock market isn't always correlated with the economy. As we saw in 2020, what really fueled asset prices was cheap and easy credit. But that's the problems. Well, what's some solutions? Well, in this inflationary environment, you want an inflation hedge. And historically, that has been precious metals. But precious metals haven't been performing that good as of late. And this is not financial advice, but just what I'm doing is Bitcoin has now proven itself to be an inflation hedge. So don't go on YOLO and put all your money in Bitcoin, but you will want some exposure. I'm putting about 10% of my portfolio in Bitcoin. And hey, gold is on sale right now compared to other assets. The stock market's at all-time highs, housing market is overinflated, but gold is around 20% below its all-time high. So it is a bit of a discount, and you want to get into assets where no one else is doing it. In March, there was huge amounts of fear and precious metals were skyrocketing. That wasn't a good time to get in, but now everyone's in the stock market, everyone's in the housing market. They're all looking at that. No one's looking at gold anymore. So this may be a good buying opportunity to get in as a hedge against inflation. And also farmland has been going up crazy. Bill Gates, he's buying up all the farmland all over America. So I think that shows a sign, because if food costs skyrocket, farmland is going to skyrocket as well. And if you can't buy farmland directly, there is some ETFs and indexes that you can use to invest in that. And you may want some exposure to defensive stocks as well. Again, not financial advice, just what I'm doing. I'm not a financial guru. This is just my educated decision of studying the financial markets every day. Because people have been asking me in the comments, okay, these are all the problems, but what can we do about it? But at the end of the day, please do your research. Don't just go off what I say. For my loyal viewers and subscribers, I just want to say thank you. The channel is absolutely going off. I think people are waking up to what central banks are doing and how the financial system works. I want to say thank you all for your support. If you haven't already, please tap that like and subscribe button. I'll keep you all up to date on the latest housing market and global finance news. Thanks for watching. If you're bored, I'll put up some other videos here. I'll see you there.